everybody. My name is Kaylin Leland here for Fourlane. Today we are going to talk about the construction over under billings. So we have our QuickBooks Enterprise for construction over under billings. We're going to go through some best practices and ways that we can use this. So 4 uniques about Fourlane. Why would we want to work with Fourlane? One, we are the #1 QuickBooks reseller. We also are a reseller and user of NetSuite, Xero, and Acumatica. Okay, we are experts in both accounting and software. Right, so we want to know that our systems are being used and our accounting and our processes are good to go. We are also ERP consultants. Okay, first thing we want to do is maximize QuickBooks, make sure that everything is being done properly and efficiently in QuickBooks. But we said we do use many other systems. We can recommend many different things for you. And lastly, we are strategic partners for change management. Okay, we want to make sure that you and your business are working efficiently and in the best way possible every single day. Okay, so today we are going over construction over under billings. What is it? What is the purpose? How do we calculate it? And then just for information, we do have future QuickBooks Enterprise webinars. Our next one will be to create a construction bid, to do a month-end close package, and then any balance sheet reconciliations. As always, please let us know what else you would like to learn. Okay, we are here. So up here, you can see my QuickBooks demo company. Right, we do have some transactions in here. But first, I want to talk to you a little bit about what is construction over under billings and what is its purpose. Okay, so what it is many construction companies have contracts that are very large and are over a year old. Okay, because they are over a year old, because they are large, revenue recognition becomes an issue, right? So we always want to match our costs with our revenue, right? We want those things to be in line, okay? Especially when we come into these larger contracts, that can make a pretty big swing of things, right? So say we have 20% costs on something, we want to recognize 20% of the revenue. Okay, so this construction over under billings is one of the methods of calculating our revenue so that we can, have a revenue matching. So right here, I have our demo company. The first thing that this always starts with is the estimate. Okay, a big thing about the estimate, especially for construction companies, is we want our sales rate, but we also want our costing in there into the QuickBooks as well. Okay, so you could see on my screen right now, I have a custom estimate. I have labor for $100, $10 at $100, but I have our markup. Okay, so now even on our estimate, even on our contracts, I have both sides of this equation. I have the costing side and I have the income revenue side. Okay, by putting these pieces on our estimate, as we move through our system, we could go ahead and have both of those pieces added to this estimate, which will help our reports later on. Okay, so from this estimate, we will create a purchase order, right? And let's take out labor. We have a purchase order for our springs and machines, and they go to our vendor. Just as a quick reminder, in the QuickBooks, when you create that item receipt or that bill for the estimate, now we have the costs on our job. Okay. Other things that we can do to put costs on our job is payroll, timesheets, bills. There are many different ways. We're really just looking for this customer job field right here, and then we can have that assigned. So many different things, many different ways We just want to make sure that it is the cost on top of the income is assigned there. Okay. Once we have the costing, then we can go into the create the invoices for our Trees Unlimited. And we have all of our information. We have the pieces in the system. We can go ahead and run our job costing reports. Okay. There are many different, this is a quick overview, under job costing, you could do job profitability, estimates versus actuals. Estimates versus actuals will show the estimated cost, actual cost, estimated revenue, and actual revenue, and the differences, all based on all of those transaction types that are attached to that job. So starting at the estimate, then the invoice, purchase orders, item receipts, bills, anything that's attached to that job. But where we really want to look is this job work in progress summary. Okay. So similar to the last one, we have our estimated costs coming from our estimates. We have our actual cost, which comes from, in this case, that bill. Said we can also do other item receipts, time cards, payroll to put our actual costs in there. Our estimated revenue, again, from that original estimate. And then our actual revenue comes from that invoice. Okay, so we have sent Trees Unlimited a $400 invoice. Okay, so that's where all of those numbers come from. So now let's talk a little bit about the over/under billings. Okay. So our estimated cost for this Trees Unlimited is $1,350. Okay. According to our bill, we have already charged $310 towards the project, which means we are about 22.96% complete. Okay. Percentage of completion method, what this is based on is how much of the costs have we planned to spend, how many have we actually spent. Okay, so our percentage complete is 22.96% of the way through this contract, through this job. Okay, so now that we have the percentage of completion, thinking about revenue recognition, how much revenue of this job should we recognize? Okay, answer would be the same thing for the costs. We know the actual costs, so we need to recognize 22.96% of our estimated revenue. So going back to our original estimate, we have $2,150 that we are expecting to receive in revenue for this estimate. Okay, 22% of that is this earned revenue column. So revenue recognition, we would have $493 that is there to be earned. But in reality, we have only sent them an invoice for $400. Okay, so even though revenue recognition says that we should recognize that $493, we've only sent them an invoice for $400. So that means we've underbilled. Okay. Now this last column, this difference shows that we have underbilled by $93.64. Okay, we've underbilled. If the actual revenue that we sent the client is, say, $500, then we have overbilled, right? We have billed over what this percent of the actual costs are. Okay. So for Trees Unlimited, we have underbilled. In this test company, I have a couple of other clients, a couple other jobs in here, but we've overbilled. Okay. One key difference, and I cannot emphasize this enough, when we do over/under billings, on our balance sheet, there's over/under billings asset and over/under billings liability. okay? The other side of that entry is going to be sales or income of some sort. The total number on this SWIFT summary, this $6,541, is the balance that should be on that balance sheet account. It is not the number that you make the entry for. Okay, that is very, very important. Because if you think about it, as you go through this process every month, that number is going to change every month. So we don't want to be constantly adding to that balance, right? We want to be adding and taking away and balancing it out. So this difference right here is not going to be, I'm going to say it again, it's not going to be the actual entry amount. It's going to be the difference because we want the balance in that balance sheet account to be this number. So let me tell you a little story one of my clients recently did for their construction company. They have, most of their contracts are 2 to 3 years, and they're pretty big dollar amount contracts. When you have over under billings, right, we're moving our balance from the balance sheet account into our sales, into our income account. What they found is it was a little bit confusing for them to see, what is the difference between the over under billing and their actual sales. Because what happens is about every 6 months, they go back to their estimate and they may adjust their estimate and put in a scope change, right? Especially nowadays with the pricing of wood, pricing of metals, everything changes regularly. So if we come back and we put in a scope change, if we put in some sort of change on this estimate, that is then going to adjust all of our percentage of completion, which will then flow into our over under billing. Okay. So what they did is whenever we do the over under billing calculation, we have a separate account on the profit and loss for over under billing. So now we can see how much is that over under billing account adjusting your income on your profit and loss, right? Because we do want it regulated. We do want it to be semi-even, but we need to know functionally what is it, and then for the percentage of completion construction method, what is it? So I just want to show, if I add labor, add another 40 hours of labor at $100 an hour, and our markup is going to be 50%. Just so everyone knows, on the markup column, we can add percentages or dollar amounts. Either way, it doesn't matter. We've now changed this transaction, okay? QuickBooks is now prompting me, would you like to add the change order? Okay. Yes, let's go ahead and add it. So we have a change order for the labor. We have this added in here. So let's come back to our work in progress, refresh this. Now our estimated costs and estimated revenue dollars have changed, right? Because we changed the estimate. So now the percentage of completion on this project is down to 5.79%. So imagine if you were a construction company that had large change orders, we are going to want to add those over-unders into a separate account on the profit and loss, because large change orders can significantly adjust what you can recognize for your revenue. So continuing with this same example, we have our estimated cost is now at 5%. Our estimated revenue, you will see right away that now we don't have $93 over unders, now it's 71, right? We haven't invoiced anymore, we don't have any more costs, but our estimates drive this percentage, and it makes a big difference. So I said, I do have a company who regularly, about every 6 months, goes through their estimates and updates their estimates. to make sure that these numbers are as accurate as they possibly can be because of all the material changes, because of labor changes, especially thinking about a 3-year contract, those are going to change regularly. Okay. And the purpose of this is to keep as accurate as possible the revenue recognition of the contracts. Okay. Yep. So this one company, as I said, will go ahead and they will add a separate line item on the P&L to see the actual over/under difference. Okay. All right. So coming back to our estimate, right? We always want to make sure that our markup is in here because we want to have the income and the costs both. We want to have all of the pieces for the reports. Other reports that you might find useful regarding that over/under billing. Committed cost by job. Okay. Little bit of a side note, but still very relatable. Okay. When you are looking at your over/under billing, you might want to make sure that all of your costs are allocated to the job. Right now, and I've put this in here on purpose, we have committed costs of $1,455 for Trees Unlimited. When we actually get the bill, when we actually post the payment, all of those pieces, that's what's going to move it from the committed costs into the actual costs. Your actual cost percentage will go up, ergo, the amount that you will be able to charge for your invoicing will also go up. Okay. So something I always recommend when people do the over/under billing, to go ahead and look at your committed costs, make sure that everything is posted, right? Because it will make a difference. It will change that percentage. Okay? And reminder, I tell people this all the time, that balance in that over/under column is supposed to be the balance in the balance sheet account, not the actual amount of the entry. Okay. Well, so one of the major things that people go ahead and do this for is construction, especially when they are have contracts over a year old. And really, that percentage of completion, it's most often told by our CPAs, by our consultants, if you have to do it or not. So that is always good to allow, to know if you have to do the percentage of completion method, or if you can expense all of your bills and everything at the time that they occur. Another company that does it said it's most common in construction, but it's really any large contracts. And so they might be consulting contracts, things like that. Said your CPA or your consultant will let you know if you do have to do that. So that's good. With over/unders, is that just a little side note for today? You might also be able to do overhead allocations. Overhead allocations would be another webinar topic that we are going to cover, but it would show some of your overhead costing into those actual costs as well. Again, raising that percentage and then being able to recognize more of the revenue each month. Just a quick overview again. I am Kaylin Leland from Fourlane. We are QuickBooks Enterprise experts, but we also work with NetSuite, Xero, Acumatica. Our big thing is our strategic partners for change management. How do we efficiently, use our accounting systems? How do we go through some of these processes to be able to get the best information possible? Okay. So today we went over what is over/under billings. What is the purpose of it? And how do we calculate those over/under billings? And our next topic would be to create a construction bid. So we need to make sure that those estimates are on point and very accurate for the rest of these pieces. How to create the month-end close package, right? So we make sure that each and every month, every time is the most accurate. We have the best financials possible. And then after that, how to reconcile the balance sheet. As a reminder, we should be able to reconcile the balance sheet, all of the accounts on the balance sheet, not only the bank accounts and the credit card accounts. It is very important to check all of those balances on your loans, fixed assets, everything going down that list. Okay. And then just please always go ahead and ping us, email us, please reach out for what else would you like to learn? We are here for you. We do want to teach and continue to have these webinars. So please let us know, what can we go ahead and have webinars about? What can we teach? Thank you, everybody, for listening today. We have Marjorie's email up at the top right-hand corner. So please feel free to reach out at any point.